everyone. You're all very welcome to Alpha Capital Group here, and we're doing another very quick market update this evening, just to kind of forecast how the markets have opened up at the beginning of this week, and of course looking ahead to some of the major data points over the next couple of days or so. So as we talked about it last week, and of course over the weekend in our weekend markets round through, the idea of earnings season is obviously so important. So really, without further ado, where we're actually going to start off tonight's session is look at the key I suppose stocks that are reporting earnings this week, whether it's before market open or whether it's after market close. So if we direct our attention to this secondary screen here, it says obviously the most anticipated earning releases for the week of the 23rd of January, which is of course today. So over the next few days, we've got a couple of big ones. We've got Microsoft on Tuesday evening after the market close. So of course we talked about in the indices, if you go on to Slick Charts, you'll see that Microsoft has a fairly strong composition weighting in both the Nasdaq and of course the S&P as well. So it's just about being aware of the overall dynamics at play at the markets. And of course, if you're solely a technical trader, just being able to navigate around the times of when there is obviously extreme or higher volatility in the markets. And of course, if you are a fundamental trader as well, you're able to obviously take advantage from both perspectives. Okay, so of course, as we said, Microsoft Tuesday evening after the market close will be very important. And of course, on Wednesday, we have Tesla. Excuse me. We also have Intel on Thursday evening, and we've got a range of other different stocks from different sectors reporting earnings throughout the course of the week. So, for example, Nextra Energy, MasterCard, JetBlue, so some of the aviation stocks, Southwest, American Airlines, Boeing, AT&T, just to name a few, as you can obviously see from the infographic as well. So this week is not going to be the most busy of weeks, but of course we are expecting a little bit of an interesting run on price action Tuesday evening for, of course, the Microsoft earnings report. Now, we do expect the earnings report to be at roughly kind of between 9 p.m, 9:30 p.m. UK time. So, of course, if you are on Twitter, it is recommended that you maybe follow the likes of Earnings Whisper, because, of course, they report as soon as the stocks information comes out, they're reporting that on their Twitter feed as well. So it's maybe something to be aware of if you are trading either fundamentals or you're maybe carrying trades through during the daily rollover at 10 p.m. So that's, I suppose, the first thing we're going to look at there is the earnings season. So, of course, if we go back to the calendar over the next few days, looking at the calendar, of course, we had Lagarde speaking today. Tomorrow is really the big day in the markets in terms of PMI data, because, of course, we've got a raft of PMI data out. Firstly, of course, in Europe, tomorrow morning, France, Germany, and the Eurozone, broadly speaking. And then, of course, we've got the UK and the US following through later in the morning, and, of course, early afternoon, just after the US session opens. So, of course, anything here with the red is obviously going to be a volatile mover of markets, particularly on the short-term perspectives. So if you're trading 1, 3, 5, 15-minute time frames, it's obviously conscious to know when are the times of most volatility to navigate around that as well. Now, from a PMI perspective, for those of you who don't know, 50 is kind of the zero threshold in the PMI. So anything below 50 is contractionary, is a recessionary indicator. Anything above 50 is technically growth orientated. So you will see here actually a lot of the PMIs, both in Europe, the UK, and obviously the US as well, which is really lower, are all at 50 or just around a 50 or obviously below it, which is quite important. So you're seeing French, German and Eurozone PMIs navigating between kind of high 48s, low mid 49s, and of course the global services PMI is just over 50. So that's the only one out of all of the European ones that's at 50. The UK ones are 45 and 49.9 respectively, so they're quite lower as well. And of course the US ones are well below 50. So recessionary indicator there is quite strong, and of course anything below 50 is obviously is illustrating a fact of lack of productivity and a lack of output, broadly speaking. So that's Tuesday. Now, of course, Wednesday, we do have Australia Day this week as well. We do have Chinese New Year as well. So we're kind of seeing that factor into the Asia session volume, particularly overnight as well. But of course, on Wednesday, we do have the Bank of Canada reporting interest rates. And the Bank of Canada are expected to go to 4.5% on Wednesday. 4.25% is the current rate. They're looking for another increase of 0.25%. Now, that is very similar to what the Fed's expectations are. on February 1st, which is a week from Wednesday. And of course, they are looking for as well 25 basis point increases. So if they are seeing anything above 25, so let's say, for example, a 0.35 or a 0.5% increase is going to be hawkish for this currency, is going to be bullish for the currency. So therefore, you'd be looking for a stronger Canadian dollar. If the actual interest rate figure that was released was higher than expected, or even the rhetoric from the BOC in terms of the policy report is also obviously more bullish as well. So we've got interest rate decision 3 p.m. on Wednesday with the statement, with the overall policy report, and of course at 4 p.m. Governor Macklem will be obviously giving his commentary regarding Bank of Canada. But before that, obviously we have Australian CPIs on Tuesday night into Wednesday morning. We have PPI core output in the UK Wednesday morning, and we've got IFO business output and productivity climate, broadly speaking, out at 9 o'clock. So the next couple of days, although it's not major news, PMIs is obviously major to a degree, but quite a lot of different bits and pieces coming out over the next few days. So I think it's going to be quite an interesting start to the week, given obviously the volatility that we've seen today. Now, of course, if you're looking on the dashboard, you will see we've very, very similar data, of course, tomorrow. And even on some of these, you'll actually have a detailed analysis figure. So, for example, the BOC on Wednesday, should I say at 3 p.m., that increase, if you go to the analysis, you can actually look at how recent expectations have been playing out. So, of course, April, June, 0.5 to 1, then 1.5, then they went to 2.25. They went to 2.5 as opposed to 2.5, which was obviously the estimate. So that's the only time where they've actually come in above estimations, really, in the last kind of year and a half or so. And of course, in October, they were expected to go by 0.5, and of course, they only went by 0.75, and only went by 0.5%, giving us that 25% basis point reduction in outlook. Since then, it's just been steady. 25s in December, and of course, they're looking for another 25 in January as well, and that'll bring the interest rates in Canada to 4.5%. So obviously, the analysis tab will give a lot more detail overall into the data, into the information. And of course, if the data is good or bad, how will that affect the markets? Because of course, you have the order flow, you have the liquidity moves, you have the technical side of the markets, but you also have the algorithms and the news traders, the fundamental traders as well, who will be taking those quick scalps. So if that's the type of style you're trading off of, just be aware of that as well, because it'll give yourself a little bit more food for thought. All right. So since then, really, since our weekend market run through, we've actually seen a bit of a stronger dollar today, broadly speaking. So those initial lows we talked about Friday evening down here at 106.60. We've actually seen a fairly decent bump all the way back up into this region here. Now, if you look at the shorter term order flow today, you can continue to see this idea of what we talked about last week with taking of highs, taking of lows back into the liquidity area. Very, very clear rejection. Friday started to roll off, obviously, to where we closed last night. And through the Asia session, we actually drifted lower from 102 all the way back down to 106 and back up again. So on the status of the day where we closed on Friday, we're slightly higher. However, obviously that can change very, very quickly, because of course you look at the euro dollar, very decent run up and all the way back down to where it was. Now, structurally speaking, if you look at the higher time frames, when we said in euro dollar, it has come into this kind of 109.25, 109.30 level. And of course, you can see that visibly as well with that very, very strong daily rejection today off of this area, which is obviously holding from the April 2022 highs. Now, structurally speaking, as we said, 4-hour impulse, obviously, to begin the Asia session last night, very, very quickly undone. And now it really becomes a case of, well, if we take the highs, are we going to get that break of structure, taking out this bullish order flow? And that really means then we've accumulated. We've taken highs, we've taken lows. We're really looking for that final liquidity move back up into this region here between kind of 108.50 and 108.75, broadly speaking. If you look at GBP USD, similar scenario as well, kind of price action trended very, very higher. Last week we talked about a nice little impulse initially above 124s, just shy of 124.50. And of course, the markets has very, very quickly tailed off at this kind of daily area. Now, of course, as we said, we do have regions over here at 125.30, and we were looking for this kind of cementing closure above 124s to really allow the price action to push on. But of course, with that DXY move today, markets pushing higher back up into this region. So really this region here, I suppose, between 102.40 and 102.55, I think is going to be structurally important, because of course, that would allow for price action to potentially break structure on both Euro USD and of course cable as well. Now dollar yen obviously seen a little bit of a pickup in strength. So we talked about this move last week. The BOJ up, down, all the way back into the liquidity level, held the bottoms, and now we're seeing the price action grind higher again, all the way back up really into this daily order block liquidity area here between kind of 132.30 and 132.70 up here in this region, as you can kind of see there as well. Aussies as well has been on a fairly decent rampage. Really, today has been one of the stronger FX currencies, really. Obviously, we had that structural decline back to the liquidity area. Very, very clear run up, second run up here into this 4-hour order block here, as I said, between 70.25 and of course 70.60. We did mention that obviously last week as well. Now, as we've seen today from the open, we saw that very, very aggressive move today on the cash price open in the US session between 2:30 and 3 o'clock in the UK. And we saw the Aussie, we saw risk assets broadly kick higher as well. We saw the Aussie USD move higher, Kiwi to a lesser degree, and also even gold as well. So gold was selling off pre-market, very, very quick and stable return back up into these local highs, as I said, around 1925, 1928. And of course, if you look at the price action, that's demonstrated in this very, very sharp V-shaped move here, V-shaped structure all the way back up. And kind of a bit in no man's land, really, to say the least. So you're really looking for a reaction kind of off some of these levels down here, or price action really cementing another break of structure to the upside for those run-ups into those weekly levels, as we talked about last week in the weekly roundup. Now, of course, if you're looking at US indices, of course, finally, S&P's has got back into the upper levels of this liquidity area here. We talked about it last week, kind of 40-20 to 40-40, and we talked even about it on the weekend review as well. The weekend markets, very, very clear run-up pre-market this morning. And then, of course, into obviously Friday's close, should I say, and pre-market this morning into the cash open, we saw that elevated run-up of which price action is currently taking. I'd say short-term daily profits is being taken up here in this region. Now, of course, structurally speaking, short-term break of structure is confirmed. So that's obviously something we're paying close attention to over the next day or so. So on the Nasdaq as well, it's pulled higher back up into this liquidity region up here. We actually talked about this last week, this area up here last week between 11,800, 11,900. We mentioned it probably 2 or 3 times last week. We mentioned in the weekly review as well, could we get back up into this region? And of course, today you will see that the price action has taken the short-term highs from last Wednesday out of the markets at 11.7, creating this higher high, higher low scenario for that secondary elevation all the way back up into this region. Now, of course, really looking to see kind of what the narrative is, because of course if the DXY starts to pick up strength and we start to drift higher, then we'll see that risk orientation differentiate again. We'll see it out of those indices, back into the dollar, back into kind of the safety play, and we'll obviously be looking to see if we can get some index weakness. Now, of course, initial profit taking on the S&Ps, initial profit taking on the Nasdaq, and of course in the Dow Jones, very, very clear run up today. It's too is kind of in Midlands territory. Why? Because of course we had that NFP mitigation pause into obviously the beginning of this week, and of course today on the US session open we've ticked higher again. So really looking for a reaction of some of these either shorter term level or kind of medium term level, or that gradual grind higher back up into this 34,000 level as well, which we kind of talked about on the weekend review over the weekend. Now, DAX, Euro Stoxx and FTSE all climbing higher back up into these mitigated order block levels, these areas, these kind of prominent fib levels. Of course, if you're looking at the DAX, you've got bullish order flow, break of structure, flagging nicely back up into this region. Euro Stoxx, very, very nice flagging structure. Break of both internal structure up here, and of course the broader one to make new structural lows, price actions correcting. So both of them are kind of like the Aussie. If you look at AUD USD, kind of similar move, break of structure, taking out this kind of internal movements here, back to the kind of the medium term bottom and flagging back up. So DAX, Euro Stoxx and FTSE is very much like the Aussie in that regard. Obviously structured highs, consolidation, break of structure, flagging back up. So really the 7,815, which is of course is the weekly level, has rejected today initially, but really looking to see over the next day or so, can we get higher into those deeper discounted levels within the Fibonacci play as well, and looking to see if there is any sort of reaction on that as well. So that's kind of where we are really at the moment. Indices ticking higher, albeit a little bit of profit taking into tonight's close, I think is pretty much inevitable, given the impulse that we've kind of seen really since kind of 3-4 o'clock today, really, since that kind of US Open opened up cash price perspective, and just really seeing kind of where the markets end up today. Tonight should be safe for the daily rollover, and of course gearing ready for the next couple of days. So we've got a lot of data tomorrow. We've got a lot of structures to develop, obviously within the price action, and of course risk management and focusing on that trading plan becomes ever present and ever more important as well. So of course, everyone have a great week and trade safe.